these smaller cap resource equities, they have been held down by higher rates. So if you look back from like a historical precedent, higher rates usually have a dampening effect on especially the smaller cap resource stocks that are denominated in currencies that are, again, dominated by commodities. So the Canadian dollar, the Australian dollar, things like that. I believe it was Druckenmiller who noted that he almost perfectly traded like the 2000.com bubble. And at some point, like, he sold, and then his like investor buddies and other hedge funds, they made like 30% in like a month or 2 months. And he was like, these guys are outperforming me. This sucks. I need to get back in. And he bought, and in his own words, like he thinks he missed like the top by like an hour, something like that. But am I more certain that we will see an enormous price rise than anything apart from uranium? No. I think we will see very good price action, but I just, try as I might, I can't find anything that has the fundamentals that uranium has. And also, try as I might, I can't really find a bear case.
Hey guys, welcome to Capital Cosm. Today I'm super stoked to have Mart Wolbert, otherwise known as YellowBull, on Capital Cosm today. I'm a huge fan of him on X. If you don't follow him, be sure to do so. It is at YellowBull11. YellowBull, Mart, what would you like me to call you first and foremost?
I think Mart is just fine.
All right, so Mart, thank you so much for coming on the show, my friend. Before we get started, nothing in this video is financial advice. Neither Mart nor I are financial advisors. So with that, Mart, for people who may not be familiar with who you are, give us a little bit of a background on yourself.
Well, first of all, thank you for having me. It's been a few months since I last done an interview, so if I come across as a little bit rusty, please forgive me for that. But I think we're going to have a good conversation today. As for an introduction, I've been mainly focused on uranium for several years now. I started writing articles on Reddit and then on Twitter as under YellowBull, as you just mentioned. And it's been an incredible journey so far. So in the end of 2022, things really started as the first part of the bull phase. And a lot of attention was drawn to the articles. I then made it my full-time job on the Contrarian Codex, where I write a bi-weekly newsletter, do interviews with industry insiders and analysts, and do company analysis. And that has just it's been amazing. Like the journey so far, the community that has been built both on Twitter and on the Codex as well, it's more incredible than I ever could have hoped when I started this journey. And that also got me into commodities in general. So I also focus on other commodities that we undoubtedly will get into later in this interview as well, such as cannabis, if you want to call that a commodity, precious metals, tin, copper, oil. I think it's going to be a great decade for commodities in general, but for uranium specifically, because over the past few years, like when I first gotten into this sector, there was a very solid bull case to be had, and that's why I focused so much on it. But like we talked about off air, just the way that this thesis has developed over the past few years, it's very hard not to go absolutely for jugular here, because the way that things have set up, both on the nuclear front as well as uranium specifically, it's been incredible, and I hope to continue this journey for a few more years as this bull market pans out.
Yeah. So tell us, what's your general sentiment? What's your general outlook on the uranium market at this very moment?
Oh, it's very bullish, but that shouldn't really come as a surprise given my Twitter handle. But I always try to stay objective and relatively conservative, because that way you can get surprised to the upside, but also not get surprised by the downside if it does happen. So I would say right now, sentiment is a bit worse for wear after a month or so of correction. So we had a correction, I believe it was like 19.29% on the Uranium ETF. And that has caused a lot of hot money to sell. Like a lot of hot money came in after December and January when, okay, uranium is doing very well. Post WNA physical was up from the mid 60s to 110. And that hot sentiment, it's always paired with correction. It's just the way that the market works. So it sold off around 20%. It then chopped sideways a bit. We're still in that chopping sideways sense, if you will. And right now, I believe that sentiment is, like, I do my own sentiment modeling, and it has served me very well in the past. And right now, I believe that sentiment is looking at around the January 2022 to December 2022 levels, like those 2 months where we weren't really at like a bottom yet, but we were certainly like sentiment was certainly bad, and certainly there was a case to be made for a rally. Um, that being said, I think right now it's just the way that the uranium sector works, man. It's so volatile, and even with this volatility and even with like short-term sentiment being relatively bad, I think like the overarching theme that a lot of people are getting, and which is important to keep in mind, is that this thesis is stronger than it has pretty much ever been. What we're looking at right now, we're looking at for nuclear specifically, government support, public support, monetary support, all the support you would ever want to keep existing reactors in operation, to build new reactors, to grant additional life extensions, as I just mentioned, but also even some talk about restarting old reactors. And it is just an incredible setup, which is keeping the demand side in place in a very, very robust way. And when I first started getting into the sector, like you had, for example, you had France who wanted to go from 70% of their country being powered by nuclear power to 50. You had numerous other Western nations looking to take down their exposure to nuclear power, because we're all going to build solar and we're all going to be happy with our solar, wind, and batteries, and it's going to power our modern industrial nations, which is, of course, purely based on ideology, but it's what they rolled with. But right now, I think the energy crisis really woke some people up, and I think that they are now realizing that if you want to power your modern industrialized nation with green and reliable energy, you're pretty much looking at only looking using nuclear power. You could use hydro, of course, but that's very dependent on your like what your country can produce in terms of where you can place the hydro. Um, so I think that nuclear power is certainly becoming a growth industry, or has already been a growth industry for a few years. I think it, like you can see the majority of the growth coming from countries like China, India, South Korea, and they are really turning their policy around. So it's great to see that pretty much across the board, nations are embracing nuclear power once again, keeping that demand in place. While at the same time, and that's something that a lot of people are realizing, especially last year, but also this year, is that the supply side keeps on underperforming. So what we have seen so far, we have seen chemical come out around short 1.8 million pounds, and that was already down from a revised 1.7 million pounds production guidance from last year, so just below 4 million pounds. Kazatomprom also came out with a big miss, and also importantly calling into question their 2025 production. And lately we have also seen Orano noting that they are facing several production issues, also due to geopolitical problems. And in total, these three absolutely massive producers, they took off from their guidance around 8 to 10% of annual supply. For people that are more into the oil market, like we're looking at around, I think, 7 to 8.5 million barrels a day that would have been taken off. If you would have bring that to the oil market, it would go absolutely crazy. But as is the case with uranium, everything is moving at glacial speed, and it just takes time for this to bake into the market. But like it's really making it's really becoming clear to a lot of investors that with the supply side keeping just underperforming and the demand side being so robust and growing, it's just this simple, or at least presumably simple, supply demand mechanics. Like they're going to stay like in place for at least 3 to 4 more years. I can't really see a credible case to be made for uranium to not be substantially higher in that time frame. And I think that this will be paired with um, a lot of good performance from the equities as well, depending, of course, on the equities you pick. Not like a rising tide will float all, or will make sure that all boats rise, but it's not all boats are created equally. But I think that the one big catalyst that people should watch out for this year is the term contracting cycle. So for a bit of historical context, between 1993 and 2004, if I remember correctly, we had around 31% to 35% of replacement rate contracting on average over that period of time. After that, between 2005 and 2008, we had a massive contracting cycle. Technically, it moved to 2011, but we had the little thing called like the Great Financial Crisis in between, which kind of hampered the progress on that one. But it was a lot of contracting that happened there between 110 and 130%. And then after Fukushima incident between 2012 and 2023, we were looking at again between that historical 31% to 35% on average being contracted. But last year, we once again saw replacement rate contracting. And that, my friend, is a starting signal of a new uranium bull market because the majority of uranium is traded on the term market. And with the term market being so active right now, that first year of replacement rate contracting has historically always introduced a new wave of contracting, several years of above 100% replacement rate contracting. And that brings with it a lot of upward price pressure because, as Grant Isaac likes to say, like we've never seen a contracting cycle start at such a high price point before, but also not with such a great demand case before. So I think that there's a lot of parallels that can be drawn between the last bull market and this bull market, or even the bull market before that. Um, but I think this one is going to be even bigger and even better just because of the dynamics that I just spoke about, and also because of a myriad of different reasons as well. Like we could talk about financial entities and everything that comes with it, but like I would say the general sentiment right now, even if it's short term, a little bit bearish, even if macro circumstances could cause another correction, I would say that overall, looking over the next few years, I can't find anything as robust as the uranium thesis is right now, and it's getting better by the day, it seems.
Yeah, so you mentioned the sentiment is just about the same level as it was in December of 2022. You mentioned replacement rate contracting as well. So where do you see the capital flowing to from the daisy chain of from the commodity itself to the producers to the developers to the explorers? Where will the capital flow to next? We've already seen Cameco rise to the very top, overperform the ETFs, and to a degree, the commodity itself. Is that going to continue being the case, or will the developers or explorers have their moment in the sun as well?
Again, that depends on the company, like you're specifically talking about. But in a general sense, I think you're spot on because historically, from like a commodity bull market perspective, it always goes physical producers, developers, exploration companies. And as the price keeps going up, you will see more and more speculative capital enter, and they will usually enter like the smaller cap companies, the smaller cap developers, smaller cap explorers, like the very early stage, because they want to hit it big and the price is going up, but it's going very well. But I think that there is one caveat to that because over the course of this bull market, I genuinely believe that will once again ring true and that there will be the way that this bull market goes. But these smaller cap resource equities, they have been held down by higher rates. So if you look back from like a historical precedent, higher rates usually have a dampening effect on especially the smaller cap resource stocks that are denominated in currencies that are, again, dominated by commodities. So the Canadian dollar, the Australian dollar, things like that. So on these smaller cap exchanges, that has certainly had an effect. That's one of the reasons I personally believed why so many of the equities are still below their November 2021 highs, even though the price of uranium has far eclipsed that. Even the term price going up substantially over the past few months. So I think that we will see that money flow and we will see it trickle down towards the developers and the explorers. Um, but that doesn't mean that the producer and the physical price won't do well in that time either. So I think we need lower rates, we need more liquidity, but also I think we need more visibility. And I think that if you were spending a lot of time on Twitter, like you would seem that everybody, or it would seem that everybody and their goldfish is already long uranium, right? Because it's so, the people are very enthusiastic, they're very loud, and uranium usually gets a lot of engagement. But if you look at like the general investment community, what I'm seeing right now, I'm using, let's just use Reddit as a proxy. So like the main subreddits, like the I want to call it casual, but more like where you would find your retail investors that are just looking for the next hot thing, but are actually just focusing on the hot thing right now. So Nvidia, top of the search right now, Tesla a few years ago as well. Bitcoin is very popular. But if you look at like the most popular general subreddits like stocks, stock market, investing, Wall Street bets, even with uranium piercing $100 and correcting recently, to be fair, but with it piercing $100, reaching 110, with equities having an exceptional 2023, especially the second half, with all those subreddits having tens of millions of active members, uranium was mentioned a grand total 6 times. Most of that was on Wall Street bets. The rest of the subreddits, barely anything. And if someone did post on uranium, it was met with both skepticism or it was met with, well, uranium has already run X amount, so I'm probably gonna put my money in Bitcoin or whatever. It is certainly met with it isn't met with the same like froth and euphoria that you would normally imagine seeing with uranium doing so well recently. So I think it was last month that I posted a graph on Twitter that showed the different phases that a cycle goes through. And right now we are entering the media attention phase. So entering the media attention phase means that you will see uranium being featured more and more on programs like CNBC, on Bloomberg, on CNN. And when you see it being featured there, people are often very worried. And trust me, like if Jim Cramer talks about uranium, I am also very worried. But it's the media attention phase that then draws in more and more capital. So I think that when the time is right, when macro circumstances allow for it, and even if they don't allow for it, I think at some point uranium just blows to the upside because with the spot market being so prone to strong upward moves and downward moves like we've seen, it's extremely volatile. And the term market price going up and up more and more because the simple fact is that we will see more contracting, as I explained earlier. And those contracts are being signed at higher and higher prices. We were seeing ceilings into the triple digits with even some chatter being out there, with contracts having no ceilings at all market reference, very positive and very indicative of a seller's market. So I think at some point that this market will do something absolutely historic. In the meantime, volatility will continue. But I think that we have a long way to go still.
Gotcha. So despite the fact that we've risen from at the very early stages of this bull market in the $30 range all the way up to the $110 range at the highs of last month, granted we've corrected back down to 20%, we did have 10 consecutive months of growth. So in context, the correction that we've seen over the last month kind of makes sense. Nothing goes up in a straight line, and this is profit taking has to happen at some point, right?
Absolutely. And historically, sorry for interrupting you, but historically, like the three factors that you need to watch is from historical precedent, like these corrections last 31.187 days, I believe. Let's call it a month, just to try not to be fancy about it. They usually correct between 22 and 27%, so we should be almost there if we go lower. If you want to grab the Sprott Physical Uranium Trust with that, like the roughly 13 to 15% discount rate we see right now, like the Sprott Physical Uranium Trust is only traded below like a minus 15%, to minus 50% premium to NAV, a grand total of I think 5 days, maybe 6 days, definitely less than a week over like the last 950 days, and each and every single time that was near the lows, and we'd already spoke about sentiment. So I would say that the correction, you're spot on. We absolutely needed it. We needed to get rid of that hot money, get rid of some froth, make a higher base than what we were at before, and then we can go from there. So sorry, I just wanted to throw that in there as well for some additional context for those people that are searching for metrics to maybe try to find a bottom.
Yeah, no. I mean, and also I can attest to your Reddit story there. because when I first started this channel, one of the things that I would do to try to increase my growth would be to post links of my videos on these subreddits. And I've got to tell you, there is so much. This was back in, I want to say, January to March of 2023. So it's around the same time period you mentioned of a bottoming, but no one wanted to listen to anything related to uranium. The general sentiment was this was a dead trade. It already played out. $60 was the top, and that was it. And then even to today, you see the same kind of sentiment there. So is uranium still contrarian in your view, despite this rapid ascension up?
No.
No, not
Sorry.
contrarian.
No, I don't think it's contrarian anymore. I think that
Okay.
enough people are familiar with the trade. It's not hated anymore. And case in point being nuclear power being more and more accepted, more and more seen as like a present and future part of our power grids. I think that public sentiment towards both uranium and nuclear power has become a lot more positive. So no, I don't think it's contrarian anymore. But I do think that we're still relatively early. And that sounds kind of weird coming from me after passing 90 and 100 and $110, even with the correction right now. But I think there's a lot of fundamentals that are backing uranium to go much, much higher. And with a supplier response, like a proper supplier response, still being several years out and demand growing, I think that it definitely can't be classified anymore as a contrarian opportunity, even though I would love to still call it that because with the contrarian codex, like you want to have like your main focus still being contrarian, of course. But when things go from contrarian to mainstream to popular, like that exponential growth of capital coming in, it's so important to capture it as well. Because if you get in early and you can stay the course, like you don't have to time it all the way to the top because nobody can. Like you're gonna miss the top. I just wanted to clear that up for everyone. It doesn't matter how much data you have to back up what you're gonna do. Like it's gonna be volatile, and at some point, whether that is $200 uranium, 250, 300, name your ridiculous number. We could get there. We could absolutely get there. Like there are arguments to be made to get to some ridiculous number on the spot market, but what I will say is you're gonna miss the top, so please have an exit strategy ready. Nobody can time it absolutely perfectly fine, and because it remains a commodity, even with the best fundamentals that I've ever seen for like any specific investment, like the back side of this chart, when it turns against you, it's going to be steeper, maybe even than what we saw on the front end. So not contrarian anymore, but we are, I would say, still substantially far enough away from any sort of selling that in my opinion, that needs to start happening. So I'm not thinking about that yet. I am focused on what is going to be next after this correction, and I think that we still have a lot of legs in this bull market. So I hope to be able to capture that momentum, even if it's not contrarian anymore.
Gotcha. And so when you capture that momentum, what are some metrics that you use to identify opportunities, companies, et cetera? Like how do you, because picking the right stocks in this sector is crucial.
Oh,
A lot of
absolutely.
these, yeah. So what are some of the techniques, the methods that you use to figure that out?
I've actually posted recently. It's a 32 stock like uranium sample portfolio where I try to capture like 8 stocks in 4 different risk categories. And the way that I think about it is, okay, if I wanted to get like really like low risk but still like decent reward, you could go for one of the majors. You could go for physical uranium or like a high quality developer, those that have already run but will still keep on running even with uranium going up. Um, but if you want to go for something like with a lot more risk, you go for like the smaller cap developers, like these early stage exploration companies where success is absolutely not guaranteed. And when you look at that, you need to find 3 things. First of all, you need to find a management team that has done it before. You need a management team that has experience, that has shown before that they can actually make it happen and they can actually create shareholder value. Secondly, you need a resource that, or a prospective resource that is showing enough promise where you think that between now and the end of this bull market, they are going to be creating that shareholder value that I just mentioned due to drilling or development of the asset. And the third one I would say is that you need to see that this stock is actually, or that the company is actually making good on what they're promising. So if they're promising a certain amount of drills or they're promising a certain development timeline, hold them to it. Talk to management, make sure that you see or that they are actually doing what they say instead of just getting a fancy presentation. Let's call it that, because a lot of mining companies are very good at that. Just throw a fancy presentation in there and try to get shareholder value, have massive G&A costs, and then just say, okay, we're gonna pop in a few drill holes, get one news release out, and then we're gonna buy another car. It is sadly a lot of thing. It's sadly something that happens a lot in junior mining. So please be aware of that. And if you can pick the right companies, I think it's very important to then also make sure that you get your allocation right. So don't be all in on explorers. Don't be all in on developers, unless that's your tactic. Like if you wanna go for the throat, if you wanna hit that home run, and if that fits your risk tolerance, if that fits your portfolio strategy, go for it. I'm not going to be telling you how to run your portfolio. Like you said at the beginning, it's not investment advice. But the way that I personally run it is just via pyramid approach, is what I always call it, with like a solid base of producers and developers, and then building on top of that with more risk. Because even if one of those risk stones of the pyramid, it gets shafted due to bad exploration results or due to development problems, whether it be geopolitical or asset related or whatever it may be, you can just replace it without having too much trouble, and you can still have that solid base. So I think it really depends on your own like strategy that you want to employ, but I think it's very important to really look for like the better management teams, the better assets, and also be very careful with new companies entering the space. There will be some gems in there. There will absolutely be some good ones in there that deserve your attention, but there will, and I'm honestly surprised by how many people jump on like these new companies because again, fancy presentations and all these guys are new and they're very small. And last bull market we went to 500 companies. I think we're at like 160, 170 right now, might even be 180 even. But like these new companies, whether they be like previous lithium exploration companies or cannabis stocks or whatever, like you've seen those, it's pretty crazy. You need to be careful with those new ones. Make sure that they have good management teams. Make sure that they actually have an asset that can produce some shareholder value, not just some moose pasture that they slap the name uranium on. So there will be some gems, but please be careful with new entries as well.
Yeah. So kind of expand on that. What's your broader investment strategy here? Do you invest in, do you get in and out of different companies? Do you try to swing trade this sector and others? Or are you more of a long-term investor? So what's kind of your time horizon there? Kind of walk us through your mindset.
For my time horizon right now, I'm definitely more of a buy and hold investor, and that may sound kind of silly with uranium being as volatile as it is, but just because it is so volatile, I want to make sure that I always have a seat at the table, and I also want to make sure that I always have a cash position ready to buy the dip when it comes like we're seeing right now, and if it drops further, I'm definitely going to be a buyer. So I'm looking at a few key levels that will dictate whether I keeping on with that buy and hold strategy. But I'm not much of a trader myself. I think there's certainly a place for the people that want to trade a sector. More power to you with that volatility if you can make use of it. But I will honestly admit that it's not my best. It's not my best quality. So I'm not focusing as much on that. I'm focusing more on like the broader cycle, and I think that's personally like the best thing to do for most people that are in this ever volatile sector. But I would say that at some point, if we do see a big drop and then uranium equities get into that second phase slowly but surely, because we talked about the second phase of this bull market being the time where developers and exploration companies really come alive. I think there will be a time where I will rotate some of those like physical and producer holdings into the smaller cap equities. Not with everything, because I don't want to like put everything at risk on some exploration and development company. We already talked about this. But I think it's important to manage your risk, but also to be aware of how this cycle goes. And if you want to trade it, feel free to trade it. But I think that if for the people that are trying to time the bottom of every single correction, if you miss it and then uranium and the underlying equities really go ballistic, you're not going to have a seat at the table and you're probably not going to be able to get back in. It's just as simple as that. Like it's been proven over the last bull market as well. And I think that this one could be even more volatile and even better. So, to each their own. I absolutely respect a strategy. If it works for you, please continue doing so. For me personally, I'm holding over the course of the cycle. When we get to a point where I want to start selling in tranches, if certain boxes get ticked for my exit strategy, I will keep doing so because I'm going to miss the top. Pretty much everyone is going to miss the top. So sell on the way to the upside and then have a beer on the way to the downside. Make sure that you don't have a position because it could get killed if the cycle goes against you. So try not to get too fancy with it.
Yeah, I mean, the way I see it is that 99% of the people watching this video probably missed the bottom, right? By that same token, 99% are probably going to miss the top as well, right? It goes both ways. So if you've missed the bottom, what makes you think that you're going to get the top as well? So you've just got to come to alignment with that realization and maybe sell in tranches, maybe get out a little too early and leave a little money at the table. That's just an inevitability. Now,
Yeah.
when these stocks rise and they fall in uranium, there's always an explosion of euphoria or an explosion of negative sentiment, let's say. How do you tease out the signal from the noise?
That's a very good question. Like I said earlier, like I have my own sentiment modeling. It's based on three things. First of all, it's based on social media. The second option is based on general media. And the last option is based on just personal chats with people both that are both in uranium as well as that are not invested in uranium. And those three combine for, like, let's say I grab Reddit and I grab Twitter and I grab some other investment forum, and then I look at general media coverage on Bloomberg, CNBC, and then I talk to 10, 20, 30 people individually just to gauge some sentiment. And then out comes a number that is roughly associated with what we've seen before. Like I just mentioned, that sentiment is now roughly at what we've seen in January of 2022 and December of 2022. The most negative numbers I've gotten so far were when I just started in October of 2020. That was we came off like the March lows. We went into a quote unquote like new high for that year. And then everybody was so enthusiastic, like this is finally going to happen. And then dropped into like the October, like intermediate bottom. And it just immediately flipped extremely, extremely negative. I don't have the numbers for March 2020 because I wasn't looking at that sentiment at that time, with like the same modeling. But the last time that we actually got below that October 2020 number was June, July of last year. And lo and behold, that ended up being the bottom because everyone was so extremely, extremely bearish. It was ridiculous. But like the overall fundamentals, it were just improving. And like I could see the writing on the wall at that time. And when you think, and I have that feeling as well, like I'm not going to sit here and pretend like I'm immune to the beauty of human psychology hitting you over the head when your investments are down like 20, 30, maybe more percent from like the highs. And you're like, lost all these gains and I'm even like negative in some positions. What am I going to do now? And then buying makes you feel like you want to throw up. That is absolutely something that happens. And that's something that has happened to pretty much every investor out there through pretty much every cycle. It's something that I mentioned in, I think, pretty much every interview that I've done. It's like, because I also have a background in psychology, and it's very interesting to see how useful it has been to implement it into the market so far. When you look at like historical human psychology, especially in markets, it always goes the same way. And even though you yourself might not be immune to it, because pretty much nobody is, it is very interesting to see how it works at like local bottoms and local tops, but especially at like major bottoms and major tops. Like there are certain things that you can gouge from those time periods that make sure that you can go against the majority of the crowd, even if it feels like it's not the right decision. Like one example that I have, like from a book that I've read a few times, it is from the South Sea Bowl. Like a few very smart people got in very early. The South Sea Bowl, it kept bubbling up, let's call it that. And then they sold out, nice profit. They were like, okay, this is great. And then it kept going up, and their friends were buying, and it kept going up. And they were like, okay, so I need to get back in. I need to get back in. And then they got back in, and it could just collapse. And that is something that happens so often. It's the same with, I believe it was Druckenmiller who noted that he almost perfectly traded like the 2000.com bubble. And at some point, like he sold, and then his like investor buddies and other hedge funds, they made like 30% in like a month or 2 months. And he was like, these guys are outperforming me. This sucks. I need to get back in. And he bought, and in his own words, like he thinks he missed like the top by like an hour, something like that. Because like at some point, you just have to physically restrict yourself from going with that psychology that comes with major bottoms and major tops. So yeah, I think that's definitely one of the things that served me well in the past, and I hope it continues to serve me and as well as the Codex well in the future.
Yeah. So, I mean, what are some tips that you could give to people, as a psychology with a psychology background to be able to maneuver dispassionate? I mean, if Drunken Miller has trouble with this stuff, then we're all going to have trouble with it regardless. Yeah. So any like tips that you could impart off the top of your head?
Keep a diary. I know it sounds stupid, but it's really not. Keep a diary of every time you feel like a certain form of euphoria, or like you want to show your portfolio to people. Like, look at these gains I have. Look at how well this sector is doing. Look at how rich I'm getting. Look at the yacht I'm going to. That's a bit much maybe, but look at what I'm going to buy with this, or I'm going to retire early, whatever. Every time you feel a form of euphoria, give it a mark. Say like from a scale of 0 to 10, you feel really, really happy about your portfolio, give it an 8. You feel euphoric, give it a 9, give it a 9.5. But do the same when you feel like your portfolio is just laughing in your face. Like you're like, I should have sold this stuff. Like I'm so absolutely done with this. And give it a mark as well. And give it like a 2.5, like a 2, maybe a 4 if it's like it's bad, but it could be way worse. And then try to chart that out on the investments that you hold. And trust me when I say this, you are going to, like 8 times out of 10, you're going to see that that sentiment correlates with like the chart pattern that you're looking at on your screen. So an example that I want to give for myself is from, I can't remember if it was June or July of last year. It was when Denison Mines, which is one of my largest positions, full disclosure, I've been in close contact with the company. I think it's great what they're doing. But even with all that conviction, and even with being in contact with the company and knowing, okay, they're going to do well, uranium is going to do well, when it breached like that $1 level and it went to like 0.98, 0.99, I was like, this absolutely sucks. This absolutely, I wasn't going to sell, but it's like, this is so terrible, and it could go down further. And like the sentiment indicators were screaming like, oh, everybody is so bearish, but at the same time, like your own sentiment, like Mark, if you want to keep that diary, is like a 2, like a 2.5, not much more than that. And lo and behold, it ended up being the bottom almost to the day. So that will be my advice to people: track your own sentiment, extrapolate that, and then put it on like your like the charts for your holdings. And I believe it will help you.
Understood. Yeah, that's actually a pretty piece of advice there. I might start a journal or diary myself.
I hope it helps.
Yeah, we might track it. Yeah, hopefully. So I think it'd be accurate to say uranium is your biggest holding, correct?
Oh, by far, it's over half of my portfolio. And the only reason it's not more, it's not like 80, 90 or 100%, is because even though I am going for the jugular with uranium, it's not like with leverage or with options, but just with like my core holdings being way over like half of my total portfolio size, including cash as well, which I hold around like 15 to 20% cash position due to macro reasons. I would say that um, I would say that right now, with uranium being doing so well, I think it's also important to be agnostic of other opportunities out there. So I think that there is a great opportunity to be had in precious metals. I tweeted this out, I think last week, and 2 weeks ago I shared a newsletter update as well, where I believe the equity bottom would be in for gold and silver. It ended up being in for now. Like gold and silver have been absolutely terrible for the past 3 years, but it's great to see them turning around right now. And it feels like this rally is real. And it feels like even with the rally happening, sentiment, again, like sentiment indicators can be applied to other things than uranium as well. And they were still terrible. It's ridiculous. Gold is almost at all-time highs. It just had its highest weekly close ever. Silver is holding, I think it just today at the time of recording, it went over 24, and sentiment's terrible. It's ridiculous. So I think there's definitely an opportunity to be had there. I'm very bullish on tin, very good supply demand fundamentals as a avid uranium bull. Very good supply demand fundamentals are my forte, and when I see that, there's always a case to be made for a good investment to be had if you, of course, pick the right companies and if you can adjust your holdings and your time frame accordingly. I would say I'm still bullish on oil. Um, I also cover copper extensively. I also cover cannabis extensively. I actually started covering cannabis in late August out of like the massive rally. It's not because I have some insider like Congress knowledge that something was going to happen, but like it was so depressed. It was so depressed at that moment, and the chart looked like uranium back in like March 2020. And I knew after talking to some very, very smart people that there was definitely a case to be made for a cannabis bull market to take place. So I took some positions, and they've done extremely well so far. I think that could continue. So mostly focus on commodities. And yeah, I think that on a relative value basis, commodities are historically extremely undervalued. And the beauty of these cycles is that they always go back up, but there will be a time that commodities are completely overvalued on a relative basis, but we are nowhere there. And I think that like these things take decades to play out. So I'm definitely going to be focused on commodities for, I think, I don't know if I get 2, 3, 4 more years, maybe longer. So yeah, mostly uranium as of right now, but also very aware of other opportunities and also placing my portfolio there to try to capture that as well. So if uranium keeps on chopping around for a few more months, I hope to capture more upside with precious metals, for example.
Are you more bullish on any of these other commodities than, let's say, uranium?
No, absolutely not. I think that there's. Am I more bullish because like some of these other commodities come from a way more depressed level than uranium, because uranium has already had a pretty strong run and equities have already done well, especially compared to, once again, like precious metals equities. Yes, but am I more certain that we will see an enormous price rise than anything apart from uranium? No, I think we will see very good price action, but I just try as I might, I can't find anything that has the fundamentals that uranium has. And also try as I might, I can't really find a bear case for it. Like we talked off air about it a bit. Like there are certain bear cases that can be found, but they need like 3, 4, 5 things to fall into place, and each and every one of those things are relatively uncertain or just like not very likely to happen, to be frank. And I think a lot of people are waking up to that fact as well. Like, for example, there was a huge narrative that, oh, Kazatomprom is going to flood the market when prices hit 70, 80, 90. Like I tweeted recently, like, oh, there will be more supply coming online at $60. Didn't happen. $70, still nothing. 80, 90, 100, 110. There's some supply coming, but nothing that we need to fill the 30 to 50 million pounds supply demand gap that we're going to see over the coming few years.
If anything,
So
they
yeah, the
cut
bear
they
case.
cut production.
Yeah, absolutely. And I think I have very close contacts with with Chinese contacts as well, and they noted that okay, no, we're looking for more pounds. So the Chinese, with like their massive strategic inventory, they are looking for more pounds of uranium because they need it. They have a multi-decade view on energy. Like they're not going to. This strategic inventory may seem large with their current nuclear output, but with them approving 10 reactors a year, constructing them in 4 to 5 to 6 years, like they're going to need a lot of uranium. And they are building their reserves. They're looking for more uranium. They're looking for stakes in mines. They're looking for a lot of Kazaki supply. And it's just incredible. So that's another bear case that can be thrown out the window. There's one bear case that I attended a European-based conference after the WNA. It took place in Brussels, and they were talking about like, okay, so where do we think supply is going to come from in the coming few years? Oh yeah, but the supply side is struggling. Yeah, we got fossil tail extraction. We got there's talk about seawater extraction. Oh, what about increased output from polymetallic mines? What about fairy dust? Like that's about as reliable, and that's what I told them in the coming few years. These things need a very high uranium price consistently over the coming few years. Could we see all this in 5 years or 10 years? Sure, we could. Actually, we might actually need it because nuclear power. It's looking like this trade is not stopping. It's accelerating. So we're probably going to need it. And if we need it, and if prices are high enough, and if you grant them enough time, it will come online. But I think the supply side is going to keep underperforming for right now. And with the contracting, with like the major companies being contracted out pretty much all the way into 2027, the supply side being so tight and like the major new mines not coming online before the end of this decade, I think the setup is absolutely incredible.
Fantastic. Well, this has been a great talk. I really enjoyed this, Mart. Thank you so much for coming on. Any concluding thoughts before we sign off?
Well, I hope the rustiness didn't shine through.
No, man, you killed it.
I hope, thank you. I hope that people found the interview to be informative. If you want more information, if you want weekly updates on these sentiment indicators and everything, you can go to patreon.com/contrariancodex. I would love to have you as part of my community. Or follow me on YellowBull11 on Twitter. So I wish everybody good luck on this ever volatile market. I hope you're all doing well out there. And I believe that the coming years will be very, very good for uranium.
Fantastic. If you guys enjoyed this content, be sure to give it a like. Comment down below. Let me know what you think. If you agree or disagree with any of Mart's points. Subscribe to the channel so we can keep getting guests like this and expanding and growing even more. You can also help by buying me a coffee, link down below, or you can click on the Uranium Insider link. We benefit off of that affiliate link as well. So that's another way to help grow the channel. So with that said, you guys, I appreciate your support. I appreciate your time, and I will see you in the next episode. Bye, y'all.